Roger wanted us to look at the currency pair, the pound against the rand. This pair is extremely oversold at the moment, which means there can easily be a weaker rand against the British pound. But we can see back here on the 8th of March and the week of the 1st of March, the currency pair tested my 40-week moving average and it could not change it into a support. And that was again another warning that the rand might strengthen even further against the British pounds. But we're so oversold at the moment that the rand can easily weaken. The first sign of weakness on the rand against the British pound will be above $20.15. Below this low of $19 a pound, 62, we can assume that the rand can continue to strengthen. Some of you might remember that we've spoken previously about this inverse cup and handle formation on the British pound rand currency pair, and that has been confirmed, and even the test of the lower high, because this high is a little bit lower than that high there. And that implies loss of momentum, strength in the rand against the British pound for more downside. The long-term sentiment that currency traders use is the 40-week moving average. And we assume that the rand can continue to weaken against the British pound once that 40-week moving average change into a support. And that is waiting at $20.64. As long as the pair trades below this 40-week moving average, we assume that the rand will continue to strengthen against the British pound. Tim wanted us to look at Allianz Bernstein Holdings, ticker on the exchange AB. They are listed on the New York Stock Exchange, and Tim, clearly brand new record high. I mean, this beautiful cup and handle formation was confirmed there around $29.86. And took this share from strength to strength. Yes, it is extremely overbought, but take note, sometimes the stochastic indicator can remain overbought and the instrument can continue to rise. So what do? We look at the candles then, and the candles have implied in the week of the 3rd of May to show a long tail at the top of the candle, which implies a shooting star formation. And that candle implies that the top of the share might be in place. If the high waiting at $46.92 starts to change into a support again, we can assume that the momentum to the top can continue. And once this lower level waiting at $43.17 starts to change into a resistance, we can assume that, hey, profit taking might escalate and that we can see lower levels. Also take note, my stochastic has confirmed a divergence. My blue line, the K line, has broken downwards through my orange line, and that implies lower levels. This spinning candle because it's such a thin real body and the tails shows us a little bit of indecision. So some might say, hey, I'm so happy with my profit. I want to wait. I don't want to use the lows. I want to wait for lower highs before I start to take profit. So what one then does is wait for a pullback, a bounce. And once the share starts to pull back and that bounce remains lower than the previous bounce, that's when the next lower high will be confirmed, and that will be say, hey, this is confirmation for me as a loss of momentum. I am going to take profit. Again, above 46.92, we can assume that the momentum to the top can continue. Jim wanted us to look at Kohls Corporation, also listed on the New York Stock Exchange, ticker KSS. And we can see here, Jim, since the week of the 15th of March, this share has just consolidated sideways. And remember, these are weekly graphs. So that tells us that for quite a while, that resistance waiting there around $64.44 could not change into a support. And that tells us that the buyers are not strong enough to push the share price through that resistance level, and that is seen as negative. Again, the strong support that has to remain in order to sustain the share is waiting at $55.17. Below that level, again, the first sign of weakness will appear. My 40-week moving average is far away from the price action, waiting at $41.01. And that is sometimes also an indication that, hey, maybe the share has just ran too hard, too fast, and that it needs to come back to almost normality and move along the 40-week moving average. If we go back on the Kohls graph, we can see it's a share that had an ugly double top that played out, head and shoulder formation that played out, struggled for a while, but once this cup and handle formation was confirmed there in December last year around $29.28, the share really moved from strength to strength. What can happen maybe, Jim, is that the share might pull back, maybe back to these support levels that is waiting there at $44.45. And again, should it find support and turn around, you might be sitting here with a beautiful inverse head and shoulder formation. But also take note, this formation goes back to May 2019. That's almost a 3-year formation. And in this volatile market, I don't know if that's how long you want to wait for a possible target. Matt wanted us to look at Barrick Gold. Again, as I've said, a lot of investors and traders are so keen because of the spike that we've seen in the gold price. Barrick Gold is overbought at the moment, but we can see both lines on my stochastic is still pointing upwards, which implies that the momentum to the top is still in place. My red line, that 40-week moving average waiting at $24.12, has changed into a support that is seen as positive. We've seen higher lows from these oversold levels on Barrick Gold, and now the big test is, will it keep my 40-week moving average as support waiting at $24.12, and can it go back to these resistances of $27.24, $28.85, and that all-time high waiting at on the week of the 17th of August 2020 waiting at $31.22. If the share can do that, we assume that the next level can be in place, the new record high might be on the table. And also note, if we move into almost no man's land territory, ground-breaking area, I like to use the Fibonacci levels to identify where the next possible support or resistance might be waiting. And we can see, if the gold price really gets going and go back maybe to $2,000 and even higher, $39.01 is a possibility, Matt, on Barrick Gold. But again, if these support levels waiting at $21.09 and $19.40 starts to change into a resistance, the warning will be on the table for Barrick Gold. Tepu wanted us to look at Newmont Mining. Listed on the New York Stock Exchange, ticker NEM, and again, Newmont Mining is now in that breaking territory, new ground. So now, Tepu, what we can do is use our Fibonacci levels to identify where the next strong resistance is waiting. And that is at $83.47, assuming that that level of $72.22 remains a support. And then $68.46 is the next strong support that needs to remain a support. Take note, your stochastic is overbought, but my lines are still pointing upwards. It tells us that the momentum to the top is clearly in place on Newmont Mining. Warren wanted us to look at C.H. Robinson, ticker CHRW, listed on the NASDAQ. And we can see, again, it's fighting that 40-week moving average, and that is waiting at $95.97. I've got a negative divergence on my stochastic. My blue line has broken downwards. My orange line, it's sitting at a 68, coming from overbought levels at around an 80. But now the big question is, can it find enough buyers to protect it to higher levels? And the strong support is that 40-week, waiting at $95.97. Lower highs are also visible. So the next question is, will these highs start to change into support again, as well as this high? If it doesn't, and the share starts to lose momentum, we might be sitting here with a cup and inverse cup and handle formation. And depending on where you drink tea in the world, some cups have more than one handle. And in this case, this one has two handles. but the formation will only be confirmed when that neckline starts to change into a resistance. And we know, I mean, that is only waiting at around $86.79. The warning of this inverse cup and handle formation will only be off the table or become obsolete once the highest part of the handle, waiting at $104.35, starts to change into a support again. What is the target of an inverse cup and handle formation? The conservative target is the length of the handle projected downwards from the neckline where the formation will be confirmed, meaning $73.14 is a possibility, or the full length of the cup projected downwards from the handle, from the neckline where the formation will be confirmed, meaning $66.45. And remember, these targets are always possibilities. It's never a guarantee. Possible strong levels that can be used. So be careful here. There is an inverse cup and handle formation. Keep note of that 40-week moving average. You can see how it protected it back in Feb and Jan this year. And hopefully the share can find enough buyers to continue to support C.H. Robinson. Clive wanted us to look at Coca-Cola, a nice share that the world use to identify what is the consumer's spending like. And at the moment, we can see Coca-Cola has continued to find resistance even back till December last year, here around $54.95. Strong resistance. Coca-Cola needs to start to change that level into a support to make the possibility there that it can go back to that high of $60.13. My 40-week moving average is a support waiting at $51.42, but below that level, the warning bell for investors will be on the table to consider taking profit. And again, we always warn, if there is one bounce, found support, and another bounce, and that second bounce is almost at the same level of the previous bounce, and the instrument starts to retrace, you might be sitting here with a double top. Again, a warning formation. But let's keep an eye on that 40-week moving average, 51.42, above 51.28. We can assume that the share, above 55.50, we can assume that the share can reach for higher levels again. It is overbought. I've got a negative divergence, so maybe consider taking profit here, Clive, should you want to. Don't forget to send through your requests for next week's show. Have a fantastic week. Take care.